Welcome. Thank you all so much for coming. My name is Clara Shook. I'm the event coordinator with the West Business Development Center. This webinar is brought to you by the West Business Development Center. We are a nonprofit funded by the Small Business Administration, the SBA, a federal organization, and we host two centers. We host the Women's Business Center and we host the Small Business Development Center for Mendocino and Lake County. Now, as you can see from our lovely grantors, West is funded through federal, California state, and local government grants. In exchange for those grants, we provide free, confidential business services. Our goal is to offer these services to small business owners and entrepreneurs during every stage of business development. So whether you're just starting out with a part-time hobby or an idea, or you've been in business for many, many years, we want to be a resource that you can call upon to help you with your business. Now, how do we do that, you might ask? Next slide, please. We do this through mainly through our one-on-one no-cost counseling. So if you have a question or you're experiencing an issue starting your business or operating your business, you can speak one-on-one with an advisor who is an expert in the field that you have a question about, whether it's marketing, permitting, accounting, e-commerce. We pretty much run the whole gamut. In addition to counseling, we also offer free workshops and webinars like the one you're at today, as well as loan packets and advising to help you get ready if you're applying for a small business loan or you have questions about a small business loan. In particular, I'm thinking of folks who may have taken out a PPP or an EIDL loan. We have advisors who can help you if you have questions on those topics. And that's pretty much how our funding is used. So if you'd like to learn more about becoming a client or taking advantage of some of our other free services, I highly encourage you to reach out to us either through our website or through our phone line and get in touch that way. So without further ado, I'm going to hand things off to our amazing instructor today, Keith Obilana. Please take it away.
Perfect. Thank you. Let's see here. So my name is Keith Obilana. I'll be your kind of running this webinar, teaching this webinar today. A little bit about my background. So I've been teaching entrepreneurship for about 8 years. 7 of those years were at Pepperdine University in Los Angeles. And over the last year, I'm actually a business advisor with the Shasta County SBDC, but teaching some webinars for the West Business Development Center as well. I co-founded an entrepreneurship program at Pepperdine University. I was the founder and director for a startup incubator down in LA. I have both my degrees. My undergrad and master's degree is in business, and I just specifically in entrepreneurship, and I love entrepreneurship. I love especially small business development, and just have a passion for helping people pursue their entrepreneurial dreams. I believe in the power of entrepreneurship and its ability to transform people's lives, and just love being a part of that journey with people. So little overview of today's webinar. So this webinar is on cash flow projections, but so I'm going to give a little overview of that, what they are and why they're important. But it's also a webinar on using Google Sheets, which is Google's version of Excel, and we'll talk about that. So we're actually going to do a live demo of walking through a spreadsheet and actually creating a cash flow projection. So we'll get right into it. What is a cash flow projection? So it's a forecast of the total amount of cash that will flow in and out of a business over a given time frame. That time frame is usually over one fiscal year. Now, your fiscal year as a business owner could be the same as a calendar year, which is January through December, or a fiscal year could be some other time frame, but it's still going to be 12 months. But your fiscal year could start in May, for example, as opposed to January. So some of you may have heard the term cash flow positive. What that is referring to is someone talking about their cash flow, and they're saying that there's more money coming into the business than going out of the business, which is a good thing. And that's the goal of what we're trying to do with our businesses, is have a positive cash flow. It may not start that way at the beginning, but the goal is to have a plan to get there. And part of creating a cash flow projection is to give yourself a visual of when that cash flow is going to turn positive. Is that going to be within a year? Is that going to be within 6 months? Or after 6 years, it's still not positive? And it helps you kind of make some financial decisions about your business. A little caveat, there's we kind of use these terms interchangeably, a cash flow projection versus a cash flow statement. But a projection is really an educated guess on what is going to happen. So you're kind of projecting what your cash flow is going to look like, whereas a statement is really a record of what has actually happened. So a cash flow statement is something that you would do at the end of your fiscal year to record exactly what happened. Today, we're kind of going to focus a little bit more on the projection side of things. So that would be more applicable to somebody who's starting a business and is trying to figure out what their cash flow will look like. But if you've already started a business, that's okay, because this would be important if you're trying to project what your cash flow will be for the next quarter or for the next year even. And you can start doing it and building one, even if you've already launched your business. You can start building a cash flow from right where you're at. And really, if you've already launched, you'll actually have some real data to put into the cash flow to use. Whereas if you're just making a purely projection prior to starting, you're really, again, making an educated guess on what will happen. Now, I use educated guess because you really want to do some research and really make sure that your numbers are as accurate as possible. So it's not just kind of, sticking your finger up to the wind and saying, that feels good, I'll throw that number in there. There needs to be some substance behind the numbers that you're putting in there. And that's really done through your market research. And that's a little beyond the scope of this webinar, but that's why we're here at the West Business Center to reach out for that kind of stuff. So why create a cash flow projection? Well, some of you may have heard the term cash is king. And it's actually estimated that 80% of businesses fail due to poor cash flow. And so when they're saying cash is king, you could have a really good business that has great profit margins, that the product is in demand. But if your cash flow is a little bit out of whack, that could actually put you out of business. So an example of that would be if you have a contract. Let's say it's a government contract, and oftentimes a government contract does not pay you right off the bat. They usually have what's called a net 30, where they pay you in 30 days of you submitting the invoice. So that business may be very profitable, and if you have employees that you've got to pay in 15 days, but your cash isn't coming in for 30 days, you have a cash flow problem, right? And you have to figure out, how are you going to cover your current bills, your current liabilities, and your payroll and all that kind of stuff now before the money comes in. And so building a cash flow statement or projection helps you look at those things, analyze those things, and figure out solutions to them before they actually happen. So a cash flow projection helps you gauge whether or not your business is going to be profitable. And if it's just starting out, it will help you gauge whether you should even open your business. It's one of the financial spreadsheets that would go into that decision. Using it very much as a budgeting tool to manage your business and to see how your money is coming in and going out, to forecast potential profits or cash needs, like I just explained, and then to assist financial institutions and investors in making loan and funding decisions for your business. So we're going to get into the spreadsheet, but before we do, I just kind of wanted to show you what the formula looks like, because when I pull up the spreadsheet, there's going to be a lot of data in there, and I don't want to overwhelm anybody who's not used to looking at spreadsheets specifically. So really, with a cash flow formula, what we are doing is we're taking the beginning cash balance, whatever cash balance you have in your account at the beginning of your period, whether that's the beginning of the month or beginning of your journey as an entrepreneur launching your business. And you're adding in all the sales, all the collections of your accounts receivables, and any other cash injections, which a cash injection would be something like a loan, any of that kind of stuff, cash going into the business. And then you subtract out all of your expenses that you paid out during that period, and you're going to be left with an ending cash balance. Okay. And then the next month, you're going to take that same number, your ending cash balance, and you're going to repeat this exact same process. And you do this over and over again for 12 months. And that's how you build out a cash flow statement for the course of 12 months. So that's the basic formula. I'm going to show you kind of what that looks like in a very simplified spreadsheet here. So as you can see at the very top, I'm going to get my little pointer here. The very top, I just did this for month 1 and month 2. This would continue on for month 3, 4, 5, all the way for 12 months. You see the beginning cash balance here. So the beginning cash balance at month 1 is $10,000. And then all your sales, collections of accounts receivable, and any other cash injections is $3,000. So your total cash in or available is $13,000. And then you take your total cash expenses. And when we get into the actual spreadsheet, you'll have a list of cash expenses. This is just simplified for the purpose of explanation. But you take your total cash expenses, which in this case was $6,000, and you subtract that from your $13,000, and you would end up with $7,700. There's something off right here. That should be an even number. But we will look into that as we get into the Excel spreadsheet. So right off the bat, does anybody have any quick questions about that? I'm going to look at the chat room real quick just to see. Any quick questions?
It looks like we do have a question in the Q&A.
Okay.
A question from Lisa. Will QuickBooks spit out a cash flow statement?
So that I'm not 100% sure of. I think it does, but I am personally not a QuickBooks pro. So that would be something that you would definitely reach out to the center, and we'd be able to connect you with someone who is, very specific to QuickBooks. In our case, what we're going to be using is a Google spreadsheet to kind of do that. But so sorry, I couldn't answer that question a little bit better, but definitely reach out to the center and we'll get you connected. All right. Any other quick questions? Okay. So we're going to jump into the live demo. Before we do, we are using Google Sheets. And so for those of you who are not familiar with Google Sheets is just Google's version of Microsoft Excel. So they're both spreadsheet tools, software. There's Microsoft. I haven't used Microsoft Excel in years just because it was paid, at least when I stopped using it, and Google was free, and it just transferred over. And Google, for me, and for I think most people, Google works just as good. I believe that they're both cloud-based, but Google Sheets is definitely cloud-based, so I can access my Google Sheets no matter where I'm at in the world. As long as I have an internet connection, I can log into my Google account and get to my Google Sheets. It allows for sharing and collaboration. So when I work with clients, this is a really great tool because we can actually both log into the same worksheet and kind of work on it together. And this is great because if you're using things like formulas, and if for some reason the formula gets messed up, I'm able to get in there and work with them to fix the formula. So that's one of the things that I love about the collaboration aspect of Google Sheets. There are slight difference in their capabilities, and for the average user, you'll never notice this. But there are, and I would say Excel has a few more features and capabilities in Google Sheets, but again, average user would never notice the difference. So with that being said, it's kind of a little difference of the two, and we're going to jump over here into a spreadsheet that I have prepared. Okay, so this is, we'll actually start over here. So this is a spreadsheet, and I'm going to zoom out. And again, I'm going to kind of be not just explaining cash flow things, but also explaining Google Sheets and the process of it. So right now, I'm going to come up here to the left-hand corner, and I'm going to zoom out of this just so you can see more of the sheet all at once. Okay, so here's the full sheet. And up at the top, you usually start off with your company name, and you put that it's a cash flow projection or it's a cash flow statement. And then you need to put what fiscal year it is so people know what year this is. And technically, you should put fiscal year ended and put the day and month. And if you look up here, we have this month 1, month 2, month 3, month 4. We didn't actually put January through December because, like I explained, not everybody's fiscal year starts in January. So whatever your fiscal year is, you could go ahead and put that in. Or you could just leave it at month 1, month 2, and address your fiscal year up here in the title. So that's across the top. These are the different columns are month 1 through month 12. And at the end, we have a total. It's going to total it all up. And then right here, this section right here, actually, I'll highlight it this way. This section right here. So this is all of your cash receipts, and we'll go over that. Over here is all of your cash paid out. And you can see we're listing out the various items that you're paying out in cash. These are your various expenses. This list here is not all inclusive. It's a very typical list, but people are going to have more, and people could even have less depending on how complicated your business is. Down here, you have your total cash paid out. And in this row right here is your ending cash balance. Okay. If you remember from our earlier explanation, whatever is down here in this bottom cell is going to come up and is going to be our starting cash balance for the next month. Now, in this particular sheet that I have right here, you notice that I have everything highlighted in yellow. Not everything, but there's some rows and columns highlighted in yellow. I did that just to show you the ones that are in yellow, they actually have a formula in there. And so when we start to build out this cash flow, you're going to see things start to auto-populate across this whole thing. And that's because there's a formula in there. Now, we're not going to work on this particular one. I just wanted to highlight it so you could see it. But I personally, that really bright yellow doesn't work great for me in terms of working with spreadsheets. So I tend not to use that color. I only use it when I want to really highlight something that I need to go back and look at or check or fix or research in my spreadsheets. So I'm going to go down to the bottom here. And I have this, you see these tabs down here at the bottom. I have another tab that's this exact same thing, but without the highlights. I'm just going to click on that. And this is the one that we are going to be working on today. You can see the highlights. I've taken those big yellow ones and I've just turned it to a muted light gray. So we still know that those are the cells that have formulas in them. And these ones that I still have highlighted here, you'll notice that I have some comments or some notes to go along with it. And I highlighted them so that I remember that there's some notes there, and we'll go through those notes as we get going. A couple things that I want to point out about the formulas. We'll get to that. Let's just kind of jump into this. So we're going to start here in this column B right here, column B. Remember our spreadsheet is broken down into columns, which are these ones that are going vertical, and they're titled with letters. And then we have rows, which are these ones that go horizontally, and these ones are labeled with numbers. And then each one of these cells has a name or an address. In this case, it's going to be D because it's in column D, and it's going to be in row 6. So we call this cell D6. And so anytime I'm referring to a cell, I'll call it out by name, B6, D6. It's kind of like Battleship or Bingo. So. All right, let's kind of get into this and start building out this spreadsheet here. Right here in this column B, you'll notice that it says pre-startup position, okay? And so this is where you're going to enter in the information prior to you starting your operations, or if you've already started your operations and you're trying to forecast into the next year, this is the position, financial position or cash position that you are going to be in before that next fiscal year starts or that next recording period starts, right? And so we'll jump down in there. When we're beginning, we have no sales, no collection of AR. So AR is accounts receivable. That means that you have provided a job and somebody owes you money for that job or that product. Okay, and that's your accounts receivable. And right now we have no collection of that. When you do collect on the accounts receivable, then you will enter it into your spreadsheet in this row throughout the year. But down here, this next one, and so we're in B9. This one is the loan or other cash injection. And I'm actually going to zoom in a little bit just so we can see what we're dealing with. So I've highlighted this because I wanted to make sure that I really pointed this out. And my little note here says, this is where you record your initial startup funds or leftover cash from a previous period, all right? And so in here, let's say you went out and you raised $10,000 or you saved $10,000 or you got a $10,000 loan. Or actually, I'm gonna go with $5,000, all right? So I got a $5,000 loan from either the bank or a family member, or I just saved it up, or I got it off my credit card. However you get your startup funds, this is where you would put that number in. So I'm going to put in 5,000 right here. And when I hit enter, you're going to see things start to auto-populate on the spreadsheet. You can see right up here, all my months have auto-populated. My total cash receipts is populated. My total cash available that's all populated because this spreadsheet has formulas in it. Okay. And I believe we'll be able to get you access or a copy of this spreadsheet with those formulas if that's something that you'd be interested in. So this is our pre-startup position. And I'm going to go to this very next one. So under total cash receipts, you're going to click on it and you'll see that there's a formula. To view what this formula is, I'm going to go up here to the ribbon up here, and you can see what the formula is. The formula says this cell, which is B10, so column B, row 10, it is equal to the sum of B7 through B9. All right, and you can kind of see it highlighted or this little orange dotted line. Maybe if I zoom in a little bit more, you'll see that a little bit better. But when I click on this, I double click on it, it shows me that the formula that's in that cell is adding up everything that is in these three cells right here, which is my cash sales, collection of accounts receivable, and my initial or my loan or other cash injection. And again, I'm going to zoom out just so that we can keep working on this. All right, so total cash receipts, and then this is the total cash available, and then we get into all of our expenses. All right, and so that's where this section comes in. Again, this is before we've launched the business. This is not calculating sales or anything like that. But when we first start out, we have $5,000 to start off the business. We need to go out and buy some inventory for our business. So let's say we went out and we spent $2,000, and I'm making numbers up. But we spent $2,000 on some inventory. We also bought some office supplies. We'll say $500 in there. And then we bought business insurance for our company. And we can just put in $100 is what our first payment is. Or actually, oftentimes business insurance will do it biannually. So we'll say it's $100 a month, but this first $600 installment is going to last us for 6 months. All right. And then if you file for California LLC, that is $800 a year, whether or not you make any money. Now, technically, they collect that, I believe, in April when you pay your taxes, that $800. But just for demonstration purpose, we're going to go ahead and put that $800 in here, right there. For let's say we just paid it off ahead of time. And so down here, you can see that our total cash paid out before we even started our business was $3,900, which means that we are left with $1,100 to operate our business. That's not a whole lot of money. You could definitely do that depending on your business, but that's not a whole lot of money. But that's where we're starting our business. And if we scroll up to the top of our spreadsheet, you will notice that in month 1, our cash on hand to start off with is $1,100. That is the same amount that we ended the previous period with, or how we in this case started the business with. Okay, so we're going to hop over here, and we're going to start filling in some sales. So we have about $2,000 worth of inventory. Let's say we have some pretty good profit margins on that, and we actually doubled that money. And so our sales for month 1 is $4,000 either. And that's what we're projecting. We're saying that, hey, when we launch, we believe we're going to be able to sell $4,000 worth of product. No accounts receivable probably in our first month, and no other cash injections into the business in month 1. So at the end of month 1, our total cash sales is this $4,000 here. And you'll notice that the cash available is $5,100. What's happened here is it's taken our cash receipts, the activity that we actually did this month, and it's added in our beginning balance. All right. So this $1,100 plus this $4,000 gives us the $5,100. But we have some expenses. So we needed to buy some more inventory. So we bought $2,000 more of inventory. This is the wages. This is where you would put in, if you have any employees, you would put in their wages. And if you look at the note over here on this side, I'll highlight that real quick. To highlight it, I go up here to the top and I click this paint bucket, and you choose whatever color you want. But this one right here, it says gross wages excludes owner. So if you're the owner of the business and you're not setting yourself up as an employee as well as of the business, then you would not put in your salary in here. That's not where it goes. The only time as an owner of a business that you put your salary in here is if you've established yourself as an employee of your own business. And there's reasons to do that, and there's reasons not to do that. That would be a question that you would reach out to the center to get help with specifically for your situation. Right. This very next one here, it's payroll taxes. So as an employer, you have to pay certain taxes for your employee. And this is where that amount would go in here. If you have any outside bookkeeping services, we would put that in here. I'm going back to month one now. I'm going to remove this highlight. To remove it, I go up here, I click on the cell, go up to the pay bucket, and I go reset. And that'll get rid of the highlight. So we're here now. We've got no payroll expenses. We've got no outside bookkeeping. We're probably still good on our supplies. Maybe we needed to up them a little bit by $100. And so far, no repairs or maintenance, but we definitely needed to do some advertising. So in here, I'm going to put $1,000 worth of advertising. We just launched a business. We really wanted to get out there. However you're doing your advertising, whether you're buying ad space on TV or radio or click per pay-per-click, however you're paying for advertising or buying brochures or business cards, that kind of stuff goes in there. So $1,000 there. And then this next one is your car, delivery, and travel. And again, I've highlighted it because I have a little note here. And my note says that the IRS provides annual mileage rating. So what I'm meaning here is that there's a couple different ways for you to record your travel expenses. One is to keep detailed receipts of everything that you do for traveling, buying gas, all that kind of stuff, repairs on your car. Or the other way to do this, which is a more simple way, is to use the IRS travel expense rate. So every year the IRS puts out a rate and says for every mile traveled, you can multiply that by, it's usually around 50 something cents. So I think right now we're at 56 or 57, might be 55, I'm not sure. But the IRS says for every mile that you drive for your business, you multiply that by 56 cents and you can deduct that as an expense. So another caveat here is that if you're using your personal car for your business, to operate your business, that's totally fine. But you need to make sure that you are separating what you're doing for business and what you're doing for personal. And one of the best ways to do that, there's various apps that actually help you do it. When you get in your car, you start the app and you swipe left if it's business or you swipe right if it's personal. And the app will actually keep track of how many miles you travel for the month. So when you get done, let's say you have 100 miles that you drove that month, you multiply it by the IRS number, if it's 56, and then you would get 56 cents. Multiply that by 100, you would get $56, okay? So that's how you would enter that in there. And then we'll keep going, accounting and legal. Maybe we had to do some paperwork filings. We hired a lawyer to do something. We put in $300 there. That's a very cheap lawyer. And then rent. We're thinking in our mind, we're starting this business. And obviously, as a business, you need an office. It needs to be a nice office because it's going to represent you and it needs to have the best features. And so we found a great spot for $3,000. It's perfect. And so we're going to put that in there, $3,000. And I have another note here. And it says that rent is going to be the same every single month. All right. And so this is one of the benefits of using a spreadsheet to do that, is that rather than coming in here every single month and putting in $3,000, there's a little trick that you can use. And that is I can click on this cell, this C23 cell. And if you notice at the bottom of the cell, there's this little blue box, and I'll zoom in so you can see it. There we go. This little box right here. If I hover over that, you'll see that my cursor changes from a hand or a pointer, and it changes to this plus sign. That means I'm right over that box. And all I have to do is I click and hold down on my click and then drag my cursor over the rest of the boxes. And it'll automatically fill those boxes for me. Okay, so now I don't have to, because I know rent is the same every single month, I don't have to go and manually enter that every single month, which is great. I'm going to zoom out here so I can keep working. And I didn't get all the way through 12 months, so I'm just going to do that real quick. I grab that little blue box and I'm going to drag it all the way out here to 12 months. All right. And so you can see 3,000 months is being put in for every, or $3,000 is being put in for every single month. And at the end of the month, this is my totals column, and you'll see it says $36,000 for rent. Now, another little working with spreadsheets, you'll notice that I can't actually see what each of these columns are. I can see the letters. I know it's D, it's E, it's F, but I don't know what month this is. So the way you fix that, because we're scrolling up and down, the way you fix that is to scroll to the top up here, and over here on the left-hand side, this really thick gray bar, if I hover over that, it gives me that little hand. And I'm just going to drag that down, and I'm going to drag it down so it's at the bottom of month 1, month 2. And what that does is that it freezes this section right here. It freezes all this section. So even if I scroll down, that section stays at the very top. And that's a really great feature to use when you're dealing with spreadsheets that have multiple rows. You can also do the same thing for your columns. So over here, these are my columns, and these are the items that I'm working with. And I can grab this gray line right here. And so I hover over it, I click and hold, and I drag it over to the end of column A. There's a problem there, and the problem is that this is merged. We're going to pass that up, but I'm not going to get into that. But let's see. So I drag this over. You guys see what I'm doing right here? And that's going to freeze that. So no matter how much I scroll over, I will always see what's on this right-hand side. And the other thing that I'm going to do just for the sake of this webinar is I'm going to hide this row up here just because it's going to make it a little bit easier for us. So to do that, I'm going to click on the row, and I'm going to go up to edit. Sorry, I'm going to go up to, actually, I'm going to right click, and I'm going to choose hide row. So I'll do that again. Right click on the row and just click hide row. And that'll hide the row for me. It didn't delete it. It's still there. It's just hiding it so that it's not in my way right now. And if I want to undo it, I can come up here and I can right click again, and I could do unhide rows. All right. That was a little more than what I wanted to get into, but great tricks for using spreadsheets. So let's get back to where we were. I'm going to zoom out just a little bit. We're in month 1, and we're going through our expenses, and we've gotten here where we entered in our rent because we found this sweet spot that was worth $3,000 a month, and we know that's going to be the same every single month, and so we dragged that out. And our telephone and our internet, that's going to be about $100. And I have a note in this one as well that says this is going to be the same every month. So again, I can simply click on it, get to that little box at the bottom, click and hold, and then just drag that out for the whole year. And that'll just stay the same. All right. Utilities, those can come and go depending. So I'm going to put $100 in here, but I'm not going to autofill that out for the rest of the months because each month that can change. My insurance, again, we said that this initial $600 that we spent, that's going to cover us for 6 months. But then at month 6, we're going to have to redo that. So I'm going to come over here and I'm going to look month 1, month 2, month 3, month 4, month 5, and month 6. And at month 6, I'm going to come in here and I'm going to enter in that $600 again. Okay, so that's there, and I can make myself a note right here. And to do that, I go up to insert, and you can insert a note, and you'll get this little box, and I can put in this little box to say insurance is for 6 months. Okay, and so that's a little note that goes along with this box. And I'm going to, again, highlight this box so that I know that there's a note there. If you scroll over the box, it'll populate, your little note will pop up. But I like to highlight it so that I know that there's a note in there. All right. And so whenever I look at a spreadsheet, when I see highlights, I automatically know, hey, there's things to look at. These ones, I'm going to get rid of the highlighting portion of it just because we don't need it. So I'm going to reset that so there's no highlight. And we'll go back and finish out our expenses. We've paid our California LLC, so we're not going to do that. And then we'll get to this box. And this is where you take your owner's draw, all right? So at the end of the day, at the end of the month, you're saying, hey, how much money did I make? And one important note is that you need to keep your business and your personal finances completely separate. So you need to have a separate business account. And the way you do an owner's draw is that you write yourself a check from your business account to your personal self. Or you could also do a transfer from one account to the other. But you definitely want to keep them separate, and you want to have records of that so people know what's going on. If you ever get audited, you have record of it. Or if, say, you wanted to sell your business someday and the buyer says, show me your financials. And they're like, hey, what's this money that keeps coming out of your bank account? You can say, that's the owner's draw. That's how much this business has been making and how much it's been paying me. So I'm going to delete my note there because we don't need it. Oops. Delete. Okay. And so owner's draw. Now, there's a couple ways to do this. One is to just say, hey, I'm going to pay myself a salary. But if you look down at my ending cash balance down here, you will notice, and that's what the parentheses are for, it says that my cash balance is actually at negative $1,556. Okay, so there's a problem here. I didn't make enough money this month as a new business owner to pay myself. Completely normal. That's not unusual at all. However, that is not something that you can keep doing month over month, right? And if it is, then there's something wrong with your business. Now, some businesses may take longer to get cash flow positive before you can start paying yourself a salary. And that's okay. You just need to know that ahead of time, right? As opposed to jumping into it and realizing, oh, my business doesn't make money and I put all my savings into this. Now what am I going to do? And that's why we do this projection, is to help us look at some of those financial things and make decisions. Right now, I can tell you that I have a very high rent. $3,000 is pretty high rent. Depending on what my business is, that's either justifiable or not. So if I'm just a little small business that is only generating, I think we said $2,000 for the month in sales, my business may not be at a point where I can afford $3,000 in rent, right? And because this is a cash flow projection, I'm looking into the future, I can actually go back and say, all right, Keith, you really want that big corner office, that nice building, but you're not there yet. That's an aspiration goal where you're going to work and grow this business to get there. But right now, we're more around the $900 a month for rent. Okay, so I'm going to change that right now, and because we have formulas in there, all the other stuff changed for me except for this row right here where I dragged it out. Okay, so I need to go and I need to fix this row to match this one. And again, I'm just going to click on this little blue dot right here, and I'm going to drag it out, and that's going to fix it for me for the next few months. All right, so there we go. So $900 in rent, much better. And if I look down here, I can see that my ending cash balance was $544 positive. All right, good job, Keith. I'm doing better with my business and my financial management. All right, now I have a choice. I could take this $544 and pay it out to myself as my owner's draw. I can enter in that amount right here, 544. And if I do, you'll notice that this bottom becomes zero, meaning that my account is completely wiped out. There's no money in there because I spent it all. I don't recommend that. I do not recommend that, especially for a baby business when you're starting off. I would leave that money in there and say, hey, look, I'm actually not going to take an owner's draw, and I'm going to leave that $544 in there because I'm going to need it coming the following months. And I'm going to need it to reinvest into things or buy some more stuff for my business, whatever that is. And that way I don't have to go out and find a loan or raise more money or put stuff on my credit card. I can actually use money. I'm reinvesting the money from my business back into my business to grow it. That's a very important thing to think about and to do as a business owner, is to really think about reinvesting the money into the business to help it grow, as opposed to the early gratification of I made a little bit money and I'm going to put it in my pocket. Now, everybody's situation is different. Some of you, that may be a necessity to take it out, but you need to consider how that's going to affect your business in the months to come. All right. So right now we're not paying ourselves, in this example, we're not paying ourselves a salary. We have $544 in our account. So we're going to scroll back up here to month 2. So we're going to be working on month 2 right now. And we're going to start working on that. Our starting balance is the same as what we ended the previous month with, all right, 544. And we're going to go through it, and we're going to basically do the same process. We're going to say we made $4,000 in sales, which is great. Maybe we collected $1,000 in accounts receivable. Still, we're not putting in any loans. We're not taking any loans or other cash injections because we don't really need to right now, which is good. So our total cash receipts, and that's just for this month, is a total of $5,000. So it's adding up 4,000 plus the 1,000 equals this 5,000. All right. And then this next line right here is our total cash available. So it's 5,544. So it's adding in our beginning cash balance and adding in what the activity that we did, the inflow of cash, to give us our ending balance, right? So that's the 5,544. And then we need to come back down here and enter in all of our expenses. So maybe we purchased $2,000 in inventory. We still don't have any employees yet. We did another $100 in supplies. Advertising, we're still doing advertising. Maybe we upped our advertising a little bit because we know the more we advertise, the more people know about our business, the better our business is going to do. Our travel, I'm just going to kind of round it off at $100 in here. We traveled. And no accounting or legal fees this month. Our rent is already put in for us at $900, telephone and internet. Let's say we spend the same on utilities, and we just kind of go through each one of these for the month, and we put in all the numbers. And you'll see at the end we spent right down here in D29. I'll highlight it real quick. D29. We spent $5,300 this month. All right, and our ending cash balance is only $244. So we didn't have enough money to pay ourselves again this month, but that's okay because we are investing into this business and trying to grow this business. We spent $2,000 this month on advertising. That could be a pretty big advertising spend for some businesses. Others, it might be nothing. It might be pennies to them, but everyone's different. But in this scenario, this is a small business, so I'm going to say 2,000 is a pretty big spend for us. But that's important because the more we advertise, the more people know about the business. We're going to grow our business. So let's go up to month 3, and we're going to start growing. All right, our business is going to start exponentially growing because we've been reinvesting. And so this month we did 6,000. I'm actually going to up that, and I'm going to say 8,000. All right. So when you're projecting out your cash flow, and I just doubled our sales to 8,000, right? There's got to be a reason as to why I did that. I can't just in real life. Right now, obviously, I'm doing just a demo, but in real life, as I'm doing this, there can't just be, oh, I just decided to put $8,000 as my sales. You have to have a reason as to why your sales doubled. All right. And that could be because, like we talked about, your advertising or your marketing campaign was just a really good marketing campaign. And so that could account for your increase. It could just be that, hey, look, you're naturally growing your business, and month over month it's going to continue to increase. Or your business could be a seasonal business, right? So if your business is a seasonal business, you're going to have spikes throughout your high seasons. And that, let's say it's the summer and this is an ice cream store, right? And we're starting to get towards the summer months. And so our sales start to ramp up during our peak season. Or it could be that you're in hospitality and you have peak seasons for hospitality. Or maybe you're a toy distributor or a toy seller. Obviously Q4, your last quarter of the year, is going to be big. That's Christmas and all the holidays that go with that. So that might be why your sales would spike. Okay, so when you're building out your cash flow projections, you're also kind of thinking through the mechanics of what's going into it, right? Obviously, if you already in business and you have data from previous years and you kind of know why or how things grow and shrink, then you can put that in and you have something previous history to be able to say why that happens. If it's a brand new business, you're doing a lot more thinking through the business and thinking, okay, what's going to happen during each one of these months? And why is it going to be more and why is it going to be less? All right. And so again, we collected on our accounts receivable. We know no cash injections. We're going to ramp up our merchandise because our peak season is coming in. So we need to spend a little bit more and get fully stocked in merchandise. We'll go through. Maybe we hired our first part-time employee, and that was $1,000 in wages and $300 in the taxes that go along with that. But yay, congratulations, your first employee. Our car, and again, you're just kind of filling this out, and a lot of it's going to be the same month over month. Some of it's going to change, and that's going to be based off of how your business functions and operates. But down here, I'm just matching a lot of the same numbers. But down here, down at the bottom, you'll notice that our total cash paid out, and I'll highlight it. So I'm working in cell E29. I'll highlight it. Our total cash paid out was $8,000, but our ending cash balance is $1,644. We're starting to grow. It's good. At this point, I may say, hey, you know what? I'm going to take my first owner's draw, all right? Because we're actually doing pretty good. So I'm going to go up here to the owner draw line, and I'm just going to take out a small owner's draw, $500, all right? And that's still leaving me money in the account. I know we're getting into our peak season, so I'm not going to be cash strapped. We're actually going to be doing lots of sales. So all of that should be pretty good. I feel okay about taking out $500 to reward myself for all the hard work that I've been doing. And so that's really, we're in month 3 right now. And that's really the process. You do it over and over again for each month, kind of thinking through everything until you get out here to 12 months. And at the end of it, this is, again, this whole column right here has a formula in it that's going to total everything up for you. And over here, you'll see that our total cash receipts, all of our sales thus far, we haven't filled it in, but thus far was $24,000, right? And our total expenses was $32,000. And our total owner's draw thus far is $500. And you can kind of see how your money is being spent, right? And so I look over here on over on column A where our items are, and I can see like this is how much merchandise I spent. Here's all my totals in column O, right? And I can see how much I spent total in payroll. Right, so this gross wages, $1,000, and taxes was $300. And this line or this column right here, column O, is a great column to be able to kind of give you an overview of how you've been doing for that fiscal year. And when you're kind of looking at this and looking at numbers, this is a great tool just to help you budget and figure out where you're going to need money. You might be saying, hey, I've got a big job coming up and we'll just pick month 9. This is a really big job. And I am actually going to need to buy new equipment for this job. It's the biggest job I've ever done. And I need to buy some new equipment to be able to pull it off. Well, using this tool helps you to know, okay, what is that going to look like? And how much money do I need to be saving for month 9? Or am I going to have to get a loan or take out a loan to be able to satisfy that contract that I'm getting or that big job that I'm getting in month 9? All right. So I'm going to zoom out real quick just so that you can see everything. That's too much. So you can kind of see everything. Obviously, we didn't fill in months 4 through 12 because it's somewhat repetitive. But assuming we filled it in, this is what your spreadsheet would look like. And I'm going to unhide that top column up there. And oops, I cannot merge it. There we go. All right. So there we go. This is what your cash flow projection would look like. All right. And then at the end of your year, let's say you projected it out, everything looks good. You launched a business, you start running it. You're going to start to get some real data. You may find out that, hey, actually in month 1, I did not make $4,000 in sales. I made $2,000. So all you would do is come back in here and re-record it. It's $2,000. Because at the end of the year, you're going to have to, this is a projection. At the end of the year, you want to create a statement that says, this is what actually happened. And you could create a separate document. You could copy this one and create a separate one to make all of those changes so you can kind of analyze what your projections were versus what actually happens, to help you make some more, just have more data and more, to make more informed decisions of what you thought would happen versus what actually happened. So when you're starting to continue to do this out for the next year, and maybe you want to do this, your cash flow projections for 3 years out, you kind of know the difference between what you're thinking and what's actually happening. So that being said, we're about 45 minutes into this. I want to stop here, and I kind of want to just open it up for some questions. So we're going to go again over to the chats, and if you have any questions, please drop them in there.
Great. Yeah, we do have a question in the Q&A, and of course, just to remind folks to send your questions on over. Our question is, business owners have all different volume. How do we determine how often we should reconcile? Daily, weekly, monthly?
So part of that's going to be based off of, okay, what is your volume, right? If you have massive volume, you may want to be reconciling every day, right? Because you don't want to wait 12 months and then try and reconcile that at 12 months. That's just going to be so much work. So that it's really just going to be based off of your volume. Most business, I would say, will reconcile at least quarterly, right? Or annually, or biannually. And it really is up to you and kind of how your business works. Again, if you have high volume, I would reconcile much earlier or much more often. If you have low volume, it's probably not as important. But great question. I like that. Okay, so business loan payments. I see that Q&A, Viviana. Great question. So that would be an expense. So if I come back to my spreadsheet here, cash paid out, one of your expenses here should be loan payments. And so right now, I don't have that in here. So you can add that in here. You could change one of these. The way you would add that into a spreadsheet would be to come over here, and let's say I want to add it right here. I would click. So I'm clicking on row 25, and then I'm going to go up here to the top and click Insert Row Below. You could do row above or row below. So it's going to either insert it above what you've highlighted or below what you've highlighted. And I'm going to put loan payment. Okay. And then here's where you would fill in what your loan payments are. Does that make sense?
Well, it does to me and hopefully to everyone else. But of course, if anyone wants a clarifying point made or anything like that, please let us know. Oh, great. Got it. Thank you. Awesome. Wonderful.
I'd also like to point out, everybody's business is different. So some of you, your cash flow could actually be a lot more complicated than this. And that's okay. And reach out to the center to get help. Some of you, this is probably what your cash flow would look like for a average small business. For some of you, it might be even less than this. And so every business is a little bit different, but this is just kind of a general overview to kind of give you an idea of what is a cash flow, how do you build one, how do you use it, why is it important to do? Okay. Any other questions there?
No, let's see. So no other questions are coming through at this time. Of course, just to reiterate, I will be emailing a link to this recording as well as a copy of the slide deck. And Keith, I believe you said that it would be possible to get a copy of this template to share with everyone as well. So all of that will be coming your way in the next couple of days. In the meantime, Keith, I want to say a big thank you for putting this together. It is not easy to be able to demonstrate all of that clearly, articulately. It did not give me any flashbacks from my accounting classes and made me actually even more excited about using Excel spreadsheets or Google spreadsheets, excuse me. So thank you. And thanks so much to everyone for coming. Just want to leave that poll up just a little bit longer. And of course, if anyone has any last minute questions, we still have a couple more minutes, so feel free to put those either in the Q&A or if the chat is easier for you, that's fine too. Whatever works best. In the meantime, do just also want to let everyone know that in the chat, I put a link to our upcoming QuickBooks workshop as well, which is starting this Thursday. So if you're a QuickBooks person, hopefully, you might be able to learn a couple new tips and tricks from that series. It's a 4-week series starting on Thursday. All right. Well, fantastic. We've got all of our polls filled up. Thank you all. Thanks everyone for coming. And again, Keith, thank you so much. Really appreciate it. All right. Well, have a wonderful rest of your day. And I hope to see everyone at one of our next upcoming workshops. Have a great one. Take care. Bye.